Hi, everyone, and welcome back to Payment Experts 2026 Digital Day. For those of you who didn't tune into this morning session, I am Rachel Kennedy, editor of Payment Experts. I will let each of our panelists introduce themselves in a little bit, but to just give you a rundown of what you can expect from this session, we're going to be looking at how payments infrastructure and payments in general can give people a bit of a competitive edge, and how sort of payments agility defines digital winners. So I'll give each of our speakers a chance to introduce themselves. We'll go in alphabetical order. So Anthony, we'll start with you.
Thanks, Rachel. Hi, glad to be back again. I'm Anthony, Head of Payments and KYC at Oddset Sportwetten. We're a German-focused online sports betting operator. Got 20 years or so in the industry experience under my belt, and yeah, really looking forward to this. It's a really good topic, and I'm looking forward to exploring it with everybody else.
Ganesh?
Yeah, I can go next. Hey everyone, this is Ganesh here. I'm the head of payment products at Entain. I look after the core payment platform brands across UK, Europe, and rest of the world. Mainly brands like Ladbrokes, Coral, Bwin, Sportingbet. Payments agility is pretty close to my heart, something my team and I've been working really last 1 year. So I'm excited about this session and look forward to the conversation.
Victoria?
Yeah, hi everyone. I'm Victoria Degtyaryova. I'm the co-founder of Paysecure and also a chief commercial officer at this beautiful company. We love payments a lot. We have built the payments infrastructure from zero, and we are very passionate about payments. So I'm excited to join this panel and discuss this topic with you guys.
And last but not least, Zach?
Hi, everybody. Zach Weinstock, Lotto.com. I'm the VP of Finance, so payments rolls up into me. We've been doing a lot of exciting work with payments over the past couple of years, so I'm excited to talk about it on this panel. And it's a little earlier here, based right outside of New York, so apologies if I take a sip of coffee during the talk, but thank you.
We all appreciate you getting up at the crack of dawn, Zach, don't worry. So to get us started with the session, let's start with the premise itself. So payments used to be this sort of back-end infrastructure system that no one really kind of talked about or used to see as a competitive advantage. Now we're saying it's almost like defines digital winners. So I'd like to ask each of you, sort of from your perspective, what has changed in the last 2 to 3 years, which has made payment agility so critical? Ganesh, you said this was an issue close to your heart, so let's start with you.
Yeah, absolutely. I think you're spot on, right? Where payments always seem like a back-end thing to right being. It's not a back-end. It's more of a top-line revenue optimization cost thing here. So from my perspective, I think 3 things have happened mainly in the last 2-3 years. That's caused this transition. Number one is player expectations. So our customers who come in, they expect top-notch cash experience. Right? So one-click payments, the response time should be really fast. Anything below that, they will leave, churn, right? So the experience has gone up. So that's one critical thing where your payment experience has to be really important. It's a high intent moment. The second point is around a lot of payment method fragmentation. If you see some of the core markets, where Spain, Canada, Brazil, you have 2-3 localized payment methods more dominant. So it's Bizum in Spain, Interac in Canada, Pix in Brazil. Not having these methods, it's almost like you're not operating there. So you don't stand a chance. Which is why having a localized offering is not nice to have anymore. It's crucial. It's like a showstopper. That's second big transition. I think the third thing, which is much more important, I think is underrated, is the compliance has ramped up recently in UK, Spain, everywhere. And it's kind of non-negotiable compliance items. There's not much wiggle room, which is why the agility in payment localization, optimization is super important to operators. Right? So that's why it becomes super important topic.
Yeah, I completely agree with all of those points, and I think that the regulatory bodies require you to have that agility within your framework to be able to make the changes that they're pushing forwards. And from Germany, 2026 is a big year for us with regards to what the review of the German regulations, how that's going to come, how that's going to adapt and change. So we have to be on the sort of forefront. We have to almost try and predict what is going to happen and be ready for that change. And that's key, I think, from a business perspective. But that's also the other 2 points of, localization and user expectation are the true driving forces behind the real change over the last couple of years. Because, like you say, if you don't have the payment methods that people want, if you don't give them the experience they want, then they will go somewhere else. They will go to a competitor that does have that.
Yeah, I totally agree with what the guys are saying right now. And over the last years, payments has changed significantly. And I'm seeing demand and big demand in local payment methods. It's not just that we didn't have local payment methods 3 years or 4 years ago. It's about that the role of this local payment method has changed significantly. They became fundamental, and the cards are no longer default payment methods for many markets. You have to have open banking, you have to have Interact, Pix, and many other local payment methods. So the payment space became much more complex, and also the competition is much higher. Every year the competition is higher and higher, and the marketing becomes much more expensive. So the cost of the user is really high. At some markets it can cost like $600, $500 per user. So that's why the conversion is extremely important. Payments conversion on the checkout screen, conversion from registration to first deposit, from first deposit into second deposit. So this is becomes really important, especially because it's so costly to buy the traffic right now.
Yeah, I would reiterate those points for sure. In the US, customer behavior has been advancing very quickly in terms of what they want, when they want it. I would add, I guess, one point which was touched upon, which is convenience and speed for the customer. I mean, the friction is something that turns customers away. And so when we're staying at the forefront, adding new payment methods, we see a quick bump in our conversion rate immediately. And that's something we're looking at across the board. And it's KYC processes, payments are a very big part. And given the fact that all these new products are coming in and things are changing so quickly, being able to do that quickly makes a big impact.
So if agility is the goal, then what's getting in the way? Some of you touched on regulations, some of you touched on local payment methods, which might sort of stall the process. Some of you mentioned KYC. What's actually preventing operators or causing them to lose out commercially if they're not sort of getting payments to be as agile as they need to be?
I'll take from a German perspective, as a whitelisted regulated operator in Germany. We have a lot of regulation in place, which is very beneficial for us and for the users to remain safe, to remain compliant. But then again, you have a subsection of players that want convenience more than they want this. So we have to name match the payment methods against the gambling account. We have to ensure that everything is completely in line and in check with the regulations. Whereas there's a big footprint of black market in certain areas that allow people to go and make third-party deposits, or just accept it and accept that and provide no protections for customers. So I think one of the big sort of shadows is that how the black market operators market to people and offer solutions and sort of encroach and creep on the regulated space. And not only is that a commercial and a revenue hitting sort of area, but that's not the key one. It's the taking away from the protections from customers. But a lot of people, I think, are more content with convenience over perhaps security in that sense. And I think it's sort of a hark back to the early Wild West days of gambling. When I started in the early 2000s, where it was very similar. I'm happy and proud where we've come from, but there's still a subsection of people that want to be involved in it in that sense.
Victoria, you sit slightly differently from where our other panelists sit. So from your perspective, what are some of the biggest blockers to becoming more agile? Is it sort of legacy systems? Is it internal silos? Is it that regulatory complexity that we've touched upon?
So I would say that there are plenty of different blockers that I am noticing currently when I'm speaking with operators. And it's definitely goes into technology legacy. But I think the biggest blockers that I currently see is more about organizational structure. So payments as a department, it fits within various different roles, various different departments. So we're in a situation when the payment manager wants to introduce a new payment method, and the risk manager is pushing back, and the finance manager is looking at the hidden fees, while the technology guys are deprioritizing the integration. So it requires a lot of alignment internally inside the organization. It requires a lot of ownership. So it has to be, the payment function has to be owned by one person. And it's something which is really, really important right now. And one of the blockers that I'm currently seeing. The technology legacy is a blocker as well, sometimes with some company, especially with the old ones. So that's what I think.
Zach, would you agree?
Yeah, I think my perspective is a little more nuanced, but for sure that happens and can happen. I would say big picture, if there's an older system or maybe something isn't perfect in the structure, setting something new up it costs time and money, development time, it's implementation time, right? And it's all resources that the company has to take into consideration of where it allocates it. And it depends. I mean, different companies have different needs, right? And so looking at certain revenue drivers, maybe this could get pushed off to the side, depending. But as I said, like bumps in our conversion rate. I mean, we sort of see the payback for this, right? And so I think it's sort of how it's communicated, and definitely having somebody in the corner to really tell the appropriate story to all of the stakeholders is huge. But yeah, definitely agree, Victoria.
So it sounds like it's a bit of a mix of kind of technology versus organizational structure that's holding some operators back. Ganesh, I wonder if I could ask you, are operators underestimating the complexity of payment change, do you think?
I do. I think probably everyone underestimates it. It's never as easy. So I think a classic example is adding a payment method, where a lot of people think it's just, okay, integrate with an API and done. But it's never as simple as that. There is a fraud task. There is a compliance aspect of it, the customer ops aspect, right? There's a cashier UX. So like another example is something like Revolut Pay, which I think probably next 1 or 2 years everyone will be using in some time. Now everyone thinks the API integration is the easy bit, but it's not. I think there's much more to it. As I mentioned, you deploy the fraud rules, meet compliance, the cashier UX needs to be right. So these things become very important, right? And I think a lot of teams, especially product and tech, myself sometimes, we're guilty of underestimating it, thinking, oh, this is fine, it's a 3-month project. But it rarely is. It's only much more than that.
Yeah, I totally agree with Ganesh. I think that it's a common assumption that people usually do not underestimate that the complexity of all the infrastructure. They think, oh, we will integrate the PSP and work is done, but it's only the starting point, to be honest. And it requires a lot of setting up smart routing, monitoring, reacting, constant reacting on the performance. So it's always about continuous work. And some people, they got stuck because they underestimate how much coordination and ongoing monitoring is required to actually boost the performance, to actually cost optimize, to actually get the best and the best approval rate for all the countries. So this is definitely a big problem, I think, that I see as well.
Thanks, guys. I forgot to mention at the start that if anyone has any questions from the audience, please do drop them into the chat, and we will get round to them either as we go or towards the end of the session. I think it would be helpful to potentially sort of define what agility looks like in practice, because I mean, for a lot of people, it will mean different things. So what does it actually look like on a day-to-day basis? So Anthony, I don't know whether you could maybe sketch out for our audience what a genuinely agile payment setup enables that others potentially can't do.
Yeah, I think that's really, it's going to give you a lot of different things that, allows you to be reactive to change within the regulatory environment. It allows you to be more selective, really, with your partners. Excuse me. At the end of the day, you need to. It depends on your vantage point from it. From my vantage point as a head of payments and KYC, it's sort of building the relationships with the partners and then having that passed on to the development teams, the technical teams. It's already been expanded upon very well there about how there are so many behind the scenes points. I think that payments, when you're looking from the outside in, you look at payments and it's like, okay, there's something there. I press deposit, my money moves through. But then having the ability to really optimize, to have that function operate across the risk, across the fraud, across the KYC and regulatory environments, function quickly and allow you to change it when you need to. That's kind of really the big difference, I think, compared to having too much legacy system where there's fixed rules and there's silos of different data and different technical teams where things just don't function in a time frame that you really require them to do. Like, for example, when you're launching new payment methods or moving into different jurisdictions, these are the kind of the big challenges.
Ganesh, would you agree?
I definitely agree. And I think payments really means different things, right? For me, there are two main things here, in addition to what Anthony mentioned. I think the number one is payment localization at scale, which is for an operator to add a payment method, whether it's a wallet, bank transfer, voucher, region, in a matter of weeks, not like a 4 or 6 month project. Right? So more of a localization layer. That's I think one big thing. The second is more around self-serve payment optimization. By that I mean, as an operator, can you experiment with the routing rules? Can you block instrument, deploy fraud thresholds in minutes on your own without a Jira ticket that takes a sprint cycle, right? Which is the reality. So I think these two things are big differentiators for me.
So realistically, then, I'm going to put you on the spot. How quickly should an operator be able to sort of add a new payment method or enter a new market? You're all smiling. Yeah. No one wants to give an answer.
In an ideal world, I would say adding a payment method should be weeks, not quarters. Entering a new market, I think payment configuration should not be the bottleneck. Because licensing, compliance, that takes longer, which makes sense. Yeah, but I think payment configuration should be weeks, maximum a month.
Yeah, I think that operators, they are losing money if they are not reacting quickly to the changes on the market, regulatory changes, or to PSP changes, payment method changes, or entering the new market. And ideally, I see it that the integration shouldn't take more than 2 weeks to get the integration done and tested, so the operator can go live and optimize the performance and scale from there. But in real world, it usually takes a bit more, to be honest. That's what I noticed from the clients and friends in the industry. On our end, we are product companies, so for us, integration is just additional integration. Either it's a KYC provider or it's a payments provider. Usually it doesn't take more than 2 weeks. And this is a big advantage, I think, of having the payment infrastructure partner who basically can provide access to any market and integration within weeks, not months. But I think that still many operators are trying to do it on their own, and it takes a lot of time.
Yeah, I would agree with that. I guess it all depends on the organizational structure really, and who you're partnered with. So for example, if you have an orchestration partner and you have that layer in there, it's usually going to be a little more quick from the point of signing an agreement with somebody to moving to going live. The infrastructure will already be there, and then it's about front-end optimization, user experience, ensuring, like for example, within Germany, there's a lot of regulatory checks that need to also be implemented before a payment method can go live. So I would like to say that weeks, as Ganesh said, would be great. But again, it depends on certain infrastructure setups, your organization, how things are siloed and how everything works. It can take a bit longer. It's just about making sure that you are not falling behind your competitors within the space. So that's kind of, yeah. I don't think there's a true answer to the question, really. I think we've all got ideals that we would like, but reality and how things function varies by organization to organization.
Okay.
Yeah. Well, I think I'll just reiterate that, it's everyone wants everything as fast as possible, right? But it's so crucial, and so having a strong team and strong testing, and I mean, it's necessary. So it takes time.
We've had a question in about entering new markets, actually, and asking basically what's the best tool in the payment sector that has the capability to know the approval ratio of each MCC of either a specific country or a region?
So on the orchestration layer, we usually monitor all the approval rates within the PSPs, within the banks, within the bins, inside each PSP. And we show this, we have this visibility for our clients. We show everything in one view, which is, we call it analytical reporting, which is an amazing tool how to analyze basically the approval rates per different country, per different PSP, per different bin, and react accordingly. So yeah, that's how we do internally.
Hopefully that answers the audience member's question. We've also had a question in that basically asks whether you guys think payment agility is affected more by legacy tech or by internal politics and sign-off. So it goes back to the discussion point that we were having earlier.
Yeah, it's a good question. I would say it's a fine balance, and again, it's organizational based. Depending on whether you're willing to take more risk and push it through, depends on your whole business risk or outlook with regards to new payment methods. But at the end of the day, I think maybe legacy tech with newer payment methods is also very difficult to put in together and have it function in a way that is most optimal. So yeah, there are challenges from both sides. I would say maybe legacy tech just slightly, because assuming you can put together a good business case and have good internal relationships, there's always possibility to make the internal politics go away a little bit by really putting across the business case for new payment methods. So yeah, there's a human emotion is easier to deal with than legacy tech. That's my take on that one.
Great, thank you, Anthony. Victoria, let's build on what you were talking about, Ari, sort of the orchestration layer. So there's been a lot of discussion around sort of orchestration and more configurable payment stacks, which I'd like to unpack a little bit more. So from your perspective, where have you seen operators gain the sort of most immediate benefit from rethinking their infrastructure?
So I would start from that orchestration. I think it's fundamental to make the agility work, to be honest, because otherwise every single change is another integration and another integration, which eats a lot of time and slows down the processes. And I strongly believe that orchestration, it solves a practical problems, practical issues for the operators. And the first one, which is the most important, I would say, is approval rate and reduce the fraudulent transactions and approve as many good transactions as possible. So I think this is the most of biggest values that orchestration is bringing. So improving the approval rate and optimizing the cost. Usually we see that with sorry, for me, it's very hard to be less salesy, but I'm trying my best. So usually we see that approval rates are not great at certain markets. And when we start working with the operator, usually we manage to improve the ARs significantly for certain markets. We also focus on cost optimization a lot. So we managed to optimize the cost per payments per market per PSP as well. We provide visibility, a lot of visibility on data. So any orchestration, it collects a lot of data from various markets, various different data points, and we provide it in a very useful view. So the payment directors, the CFOs can use it for their own benefit. So I think that the main thing is that orchestration gives you the tools and gives you the instruments how to manage the payments and to make it cost effective and to manage it in a very effective way. But it also requires a lot of work. You have to put multi-acquiring strategies, smart routing in place, retry logic, cascading, everything should be in place. And you have to implement all this monitoring, all these alert systems that you're able to spot the failed transactions even at night if you're sitting in Europe and managing Brazilian operations. So we kind of give you the tools and the instruments and which you can, guys, all usually operators use to improve the performance of payments in general.
Okay. So from the flip side then, guys, what problems is orchestration actually solving for operators today?
Yeah.
No, you go ahead, Ganesh.
Yeah. No, I think from an operator standpoint, the key thing is speed to market. Because I feel a lot of the capabilities an orchestrator is giving, in theory, an operator can do, but it might take 1 year, 2 years, right? With just so millions of things in the backlog. So the way I see an orchestrator is more, it's an accelerant, where we get speed to market, localize payment, optimize your payment as well from a revenue cost standpoint, and more importantly, resiliency. If an acquirer falls down, you can easily add in an acquirer for key methods. So I think that's how I think about operator, where it's the speed to market to get this thing without committing a lot of engineering capital.
Yeah, I think that was roughly what I was also going to say. It's allows you to focus your resources in a better way internally to, as you say, go with speed to market. When you want to change to new jurisdictions as well, you have that infrastructure in place already that allows you to really be more effective and more efficient.
Amazing. Thanks, guys. We've had a question in about stablecoins, and I'm amazed that we haven't had one in earlier than this, given it seems to be the buzzword of the year. We do actually have a dedicated stablecoin session later today, but I did want to ask you guys, sort of, are operators getting to a point where stablecoins are almost becoming a real option for customers as they want to sort of deposit and use money within your platforms?
From my perspective, because we are in Germany, we have the regulator who whitelists and approves a number of payment methods and payment types that we can use. Stablecoin isn't really in the arena just yet, but I know for other jurisdictions, there's a lot more regulation going around. People are starting to think about it, not only for a customer-facing payment method, but for operators that are using cross-border payments, accepting that and paying invoices, paying for agreements and everything in the background, that it is being identified as a significant solution. And I think it's, like you say, one of the keywords. I think it's one of the buzzwords for the industry. And I think it's certainly a direction that, rather than true crypto, is more likely to be legitimized and be pushed forward in the coming months, years, with regards to a number of different areas within businesses. And I would say probably that the customer facing side of it is probably going to be behind how it's used for internal solutions.
Yeah, I agree. I think even from my perspective, from other regions as well, probably the more initial use case may be in the settlement layer, more non-customer facing. That's probably the value add. For the customer facing side of things, I think because of regulation compliance, it's probably more of a wait and watch. It might happen, but probably it's easily 1 year out.
Zach, you're in a market where it's moving slightly quicker than most, so I don't know whether you can offer a different perspective.
Yeah, well, I think there's, in the US, I mean, I've been looking at it very closely for a while. It's really, really interesting technology and definitely strong use cases. Now with, the space that we're in specifically with, lottery courier, I mean, we have to keep, US dollars in certain bank accounts, and there's lots of regulations around that. But I think there's still going to be some use cases that we do use it for. Yeah. Like you said, like if there's an international payment vendor, I mean, this is like instantaneous, right? Across the world. I mean, it's some really cool stuff.
And we have another session at 2:00, which is actually going to talk around stablecoins beyond the buzz. It's well titled. So do tune into that if you're interested to learn a little bit more around how stablecoins are going to be used. Going back to our discussion, I wanted to look a little bit at agility versus control, where there seems to be an obvious tension. So the idea being that the more flexible you become, the harder it can be to maintain control. And you guys feel free to disagree with the statement, but I did want to ask whether increased agility introduces new operational or compliance risks.
I would say that there's certainly opportunity for that. If you're a very agile company when it comes to payments, and you are pushing the boundaries on the number of payment methods and the timeframes that you are releasing them in, you're going to have a compliance headache because the more payment methods you use, the more onboarding you have to deal with, the more behind the scenes compliance checks as well. There's risks, there's regulatory concerns. For example, within Germany, if you release a new payment method, as I touched upon with the whitelist, you have to reach out to the regulator, you have to have a conversation with them, you have to receive approval. So there's a lot of additional work going on with regards to that. So the more payment methods you have, while it may be fantastic from a customer perspective to give them this wide range of things, internally you are sort of piling up the compliance, the risk, the fraud, the payments relationship side of things, and that's taking up a lot of your resources as well. So yeah, can it get out of control? Even in my standard day-to-day, my inbox looks like a bomb has hit it most of the time, and I'm struggling with that. So do I have control all the time of that? Absolutely not. So there's certainly a linkage between more flexibility, more agility, and losing control. But it's all about the balance that you wish to take with regards to the number of payment methods and how you wish to handle them and how you wish to provide them to your customers, and whether you are, like us, a single jurisdiction operator, or whether you're a multi-jurisdictional operator, and what you need to do as a result of that.
Yeah, I would say, putting any new sort of, infrastructure in place has some risks, but it's how you do it, right? And so being very careful, maybe having in a very small market or very low amount of traffic and testing, right? And then the orchestration long term should actually reduce the risks, et cetera, right? And so I think more midterm it's a net gain. And improvement, right? I mean, the smart routing is that it can handle that you can sort of use resources other places and have the orchestration do that is really interesting, right? Because it can stop fraud and save costs on catching it before, and then also, if there's a processor fails, quickly routing it to another process. The customer doesn't even see that, right? And so you can make sure you capture all revenue. It's some pretty fun technology.
Yeah, no, I think I agree. I feel it's probably a design problem, right? If you design orchestration on weak controls without any audit logs, change control, right? That's you're bypassing, you're just shortcuts. Then there's definitely a problem. But I think designed properly, it's probably much better to the status quo, because you have much more visibility of a rule in a tool, right? In the configuration layer, versus some rule buried in some code somewhere that nobody knows about. So I think it goes back to how we design it.
And Victoria, from where you sit, how would you advise operators to sort of balance that rapid deployment with regulatory requirements?
So I think that to be honest, I'm more a business person, and I see a lot of value in being agile and flexibility. And I see a lot of value in multi-acquiring strategy as well. I still see that a lot of operators, some of the operators, big operators, they're still using one or two PSPs for acquiring. But the market has changed significantly. The player behavior has changed significantly, and it doesn't work this way anymore. It doesn't work effectively this way anymore. So I definitely see a lot of value in agility. But as Anthony rightly said, it's a matter of balancing it. So you have to control, you have to have all the right instruments to control, to risk manage, compliance instruments, and so on and so forth. So it's a matter of balancing, and it's especially important when the operators have multi-market strategy, when they work on different markets with different regulations. The regulation is changing quite rapidly, and it's super different in different jurisdictions. We have operators who are live in LATAM at the same time in Africa and in Europe, and the regulation is totally different, but they do require a lot of payment methods. They do require M-Pesa, PIX, UPI, and all of this, but they have to manage it in a right way, in a controlled way. And it's very important. The balance is very important. I agree with Anthony.
Amazing. I'm conscious of time. So to our audience members, this is your last chance to get your questions in before we break for lunch. I did have a few outstanding questions, and it's almost like a quick fire round for all of you. So I don't know whether you could give me one thing, just one, that is slowing operators down today that you think needs to change. Zach, I'm going to put you on the spot and ask you to go first.
Well, I'll say just manual processes in general. And I know I'm maybe coming from a finance perspective, but we have our customer support teams, and our accounting teams, and our data and business analysts, and so even with as much automation as we have, there's still some manual processes that can be solved for sure. And I think having all of the data sort of sit in one layer, one piece is very helpful.
Yeah, I would say that a lacking of the right orchestration partner is definitely a blocker. So we add additional layer, which manages all the payments, approval rates, and everything. So I think I would say it's a lacking of partner.
I'm going to go with the classic legacy systems. So that's just, buzzword. Nobody wants to be dealing with legacy systems anymore. Everybody wants to be up to date and future-proofed. So yeah, I think that's my take.
Yeah, mine is similar. Like I call it configuration debt. So you have tech debt, you have configuration debt. There's a lot of operators sitting on rules written over the years, fraud rules, routing rules. Nobody knows. The people who knew about it probably have left the org, so it's just there. So if you want to do any change, someone has to go through the code again, which creates again a huge dependency. And I think you can get a shiny system, but if you don't know what you don't know, there's still this manual element will slow you down. So I think that's one thing hopefully you should change.
And how would you go about changing it?
Yeah, that's the challenge. I think legacy system related involves working with the right partners to slowly build up a separate platform. Not at all in any way realistic in a short time frame, but if I could snap my fingers overnight and see if we could make that change happen, then that was an area that I would start down, where you could build from the ground up and building it in a future-proof way. But resources and business risk is always going to be a challenge for managing that as well.
Yeah, I think it's probably a combination of build and buy. Because generally in org, it's seen as build versus buy, where I think it's about both being prudent here, because you can't solve all legacy in one day. So it's about, okay, do have a plan, but don't wait for it. I mean, you might take 5 years to fix it, right? So it's being smart, buying capabilities that are not core to your business, but at the same time, transforming internal processes.
Great, thanks guys. So we have come to the end of the session. As I said, we will be back at 2 o'clock for the remainder of our sessions for the day. And again, it will be stablecoins and how they transform operator payments. I'd like to thank all of you speakers for coming on and sharing your insights today. It's been very helpful to all of our audience members. If there were any questions that we didn't get around to answering, please do send them in and we will make sure that they are sent to our speakers and answered as soon as possible. But thank you so much, guys. Really appreciate it.
Thank you, Rachel.
Thank you.
Rachel.